I think what we're watching most carefully is air traffic. Air traffic was reported yesterday. Globally in October, it was up 6.3%. Year to date, it's up 6.7%. I think people have gotten used to a new normal of 6 to 8% growth in global air traffic. It's been pretty strong.
Is that a sign of the economy or just more people flying?
Sign of the economy, consumer sentiment. It's a secular trend. But I think a more normalized rate should be probably around 3 to 4%. So I think that's probably the biggest risk as people think, is there a pullback because it just normalizes. And the region we're watching most closely is China, is Asia specifically. It accounts for 30% of air traffic globally. Southeast Asia is actually what we're watching. The airlines there tend to be unprofitable, so that's what we're taking a closer look at.
Gordon, what do you think just about the tenor of the trade talks and what was announced after the G20?
Well, I think it's still positive, as Dennis pointed out, Muhlenberg, that it's a long-term game. This is not a short-term game. So Boeing has to take the 20-year view in the way they design and build airplanes, looking at traffic on an extended period. It's gonna grow. So those airplanes are going to be built, they're going to be delivered, and I believe that the traffic will be, as it has been, growing at a steady rate, or a faster rate even.
Here in the United States, airline stocks have really soared as we've watched competition get a little smarter. And Gordon, we've talked about this a lot of times from you. Is that good news or bad news for Boeing, or is that not reflective of what's happening around the rest of the globe? They want as many competitors as possible to be buying as many planes as possible.
I think they want to get paid, and so having some stability financially, the U.S. airlines have certainly will pay for the airplanes that they are delivered and not be in bankruptcy court trying to throw off unwanted debt. So a stable outlook in the U.S. for aviation is good for Boeing. There's no question about it, because it's going to grow, and it's going to grow at a rate that can be sustained.
Sheila, what's your overall take on the stock right now?
We still like it. There's no free cash flow impact. We look at free cash flow to judge our stocks. The stock's trading at an 8% yield. Market's at 5 and change, so still a 30% discount to the market and no impact to free cash flow.